Palantir is slated to report first quarter 2024 earnings results on May 6th, so I'll preview what investors should look for when Palantir reports those numbers. I'll also update my recommendation of Palantir stock. As of right now, I don't have Palantir stock rated as a buy. I took it off my buy list a couple of, I would say several weeks ago after the stock price soared by so much since my previous buy recommendation. This is the second time that's happened where I recommended Palantir stock as a buy and the price increased by so much so fast, I brought it back down to a hold recommendation. So you're going to want to see if I'm recommending it as a buy going into the quarter as well. So let's jump into the preview and let's answer these questions.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so analysts on Wall Street that are following Palantir stock, they expect it to deliver 8 cents per share in EPS in the current quarter. That's up very slightly from 90 days ago where they thought Palantir was going to deliver 7 cents per share in earnings for the current quarter. So Wall Street analysts that are following Palantir stock, they haven't changed their outlook on this company, at least very much for the last 90 days. It's been relatively stable, which has been one of the fewer surprising companies that has had a surprisingly stable earnings outlook throughout the first quarter of 2024. Now, within Palantir's earnings, I'm going to look for specific segments within the company. One area I'm looking for excellent growth is in its commercial revenue segment. Everybody knows Palantir has strong traction in the domestic, in the US government business. It's demonstrated its capabilities and it's entrenched itself as one of the premier providers of software to the US military and other government institutions. Commercial revenue had been harder for Palantir to get going, but lately it's really accelerated this. As you could see in the latest quarter, 70% commercial revenue growth in the US. Now, overall commercial revenue growth was only 32%. So outside of the US, it's having a harder time. But in the US, very strong commercial growth, and I'm expecting that to continue with the success of its AIP boot camps. I'm suspecting some of those boot camps to turn into revenue generating opportunities and continued expansion of its ability to offer businesses its services for lower price. Remember, Palantir is the best in class in terms of AI software services. But the difficulty for Palantir has been to offer this service at a low enough cost that it can get wider adoption, right? Because not everybody has the kind of budget like the US government, right? Not all businesses have that budget, only the largest businesses. So if Palantir can make its service more affordable and still high quality, then it can receive wider adoption among the business community. That's what I'm looking for. That's what's going to unlock the massive value for Palantir stock investors, is its expansion within business, because there's a limited amount of governments and government institutions worldwide. There's much more opportunity in business, in enterprise. And if Palantir can get the same amount of traction within business, man, the opportunities are huge for Palantir longer term. So another thing I'm going to look for is another quarter of profitability on the bottom line for Palantir. They've had 5 consecutive quarters of GAAP profitability, 93 million in net income in the most recent quarter. I'm going to expect continued profitability on the bottom line for Palantir, especially because with higher interest rates, the company can invest its roughly $3 billion in cash on the balance sheet. It can earn 5.25% in super safe government bonds. So that's going to help its profitability on the bottom line. Now, the company delivered adjusted earnings per share of 8 cents in its most recent quarter. That's what investors are looking for from Palantir in the current quarter as well. We already talked about US commercial revenue growing by 70% and US commercial customer count growing 55% year over year. I want to see continued expansion in this segment, even if it's not this large. 70% and 55% is really strong. If it can continue at that rate, that would be great, but even at a slower pace would be excellent as well. But it has a long runway. It only has 221 US commercial customers. Only 221. Think of all the businesses in the US and it only has 221 of them as customers. And that's because it's so expensive, not because the quality is not there. The quality is there. The problem is that it's not affordable for many, many businesses. So as it can make itself more affordable, it can expand into the opportunity segment. And the boot camps are really helping because it's freeing up more capital from business. If Palantir can demonstrate to these businesses what it can do, the value it can add, that can unlock a lot of value from business that may have previously thought they don't have the budget for this. Once they see the value that Palantir adds, they might go looking for the budget. They might go and borrow money so that they can invest in the Palantir service because they'll realize, hey, if we spend on Palantir, then our business will improve and it'll leave us more money. So it's worth it to go borrow money to buy Palantir service right now because it'll give us such a competitive advantage. So that's something I'll be looking for too. The total commercial contract value is another important metric I'll be looking for. In the latest quarter, 107% growth, up to 343 million. Now, remaining deal value grew 32% and 28% quarter over quarter. This is the contracts that Palantir has already signed, and they will eventually turn into revenue once Palantir serves whatever they've contracted to offer. Sometimes these contracts can be for 3 years, and so Palantir will recognize that revenue as they serve that contract. So they can't recognize all of it as revenue immediately. They have to do it slowly as they build out and develop that service. Now, I highlighted that they had $3.7 billion in cash and short-term investments. That's going to allow the company to generate roughly 200 million in annual interest income because they can get about 5.25% on this money, investing it in super safe US government bonds. And so if they build on this cash balance, that's more money they can earn on government bonds, or they can use this cash strategically to offer customers better terms. Remember, I said that Palantir is not very affordable because they're so expensive. What if they use this cash to offer their customers better terms and say, you know what, we understand that our service is expensive. What if we offer you our service and you don't have to pay us back in 6 months? That'll give you plenty of time to see the improvement in your business from our service and generate revenue and profit from our service, and that'll leave you more money to pay us back. So because Palantir has a strong balance sheet, it can afford to offer better terms to its customers and expand its customer opportunity set because it can use its balance sheet and give more favorable terms to customers. I'll be looking to see if management's deciding to do this to open more opportunity going forward. Now, Palantir is not cheap, right? Not only is the service not cheap, but the stock is not cheap. It's trading at a forward price to earnings of 56.75, near the most expensive it's been in the last year. I've generally recommended Palantir stock as a buy when it has fallen below or near this forward price to earnings of 45. This has been the valuation I've been comfortable with Palantir stock, and I'm still targeting that range for a buy recommendation. So here at 57, I'm still not recommending Palantir stock as a buy, but I wouldn't be surprised if after the earnings results, if I change my recommendation. If the company comes out with better than expected earnings, or if the company's earnings release for some reason causes investors to sell the stock unjustifiably and it brings the valuation down closer to 45, I might upgrade the stock to a buy. Nevertheless, the company is an excellent business. It's done a great job expanding profitability, expanding cash flow from operations, broadening its reach to a wider customer set, all of which is positive. The only thing is the valuation is already incorporating all of those positive aspects. I would want a better entry point into Palantir stock, which I might get after the earnings release. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.